Hello and welcome to this session on Oracle Retail Sales Audit Key Features. During this session, you will be introduced to several key features of the sales audit system, namely the sales audit integration process, the store day concept that is central to sales audit processing, transactional data import, various types of transactions, retailer-defined audit rules and totals, the auditor dashboard and contextual BI, and finally, data exports. The primary function of any sales audit system is to take in sales and returns data from a point of sale or order management system and provide a mechanism to find and correct any errors discovered in the validation process. This needs to be done prior to passing the sales data onto financial and inventory management systems or other systems as needed. Any sales captured before sales audit processes are called unaudited sales. Unaudited sales are fed to flash sales at the same time they are fed to sales audit. Since flash sales contain unaudited data, the audit process can result in differences between audited sales and flash sales. This slide displays the activities that are performed in the sales audit system. On the top left, we see that the process starts when sales audit imports data from the point of sale, as well as customer order and sale information from an order management system. During import of the sales data, sales audit performs a match of the sales data with the foundation data. Discrepancies found during the import of sales and order data are saved as errors within sales audit. When the sale data import is complete, sales audit audits the data based on the rules defined by the retailer and may find additional errors. During the audit, sales audit may identify some discrepancies. Such discrepancies are also stored in the system as errors. Auditors need to resolve or override these errors, after which the audit process is rerun to validate the corrections. When no more errors are found, data within sales audit is ready to be exported to one or more external systems integrated with sales audit. A store day is the period of time when retailers perform their day-to-day activities in the store, such as sales, returns, or exchanges of merchandise. For example, a retailer is open for business at 8 a.m. and closes the operation for the day at 8 p.m. across their physical stores. So the store day for the retailer in this case is 8 a.m. to 8 p.m. A store day may span one or more calendar days during which the retailers run their business. This is common in convenience stores that operate 24 hours a day, 7 days a week, and may systemically close their business day at, say, 3 a.m. as opposed to 11:59 p.m. Another example might be an e-commerce site for a retailer that also operates 24 hours a day, 7 days a week, and may systemically close their day at a time other than midnight. Sales audit uses the store day concept to handle business days that span over more than one calendar day, like these examples. Sales audit determines the end of the store day to be when the store sends a day close transaction from the point of sale system. The source of transactional data for sales audit is the RT log file that comes from the point of sale or an order management system. The RT log file contains the details of all transactions, including sales, returns, customer orders, paid out, etc. It also includes other details for the transactions, including the items, the tender, and taxes. This file is imported into sales audit by a batch process to start the sales audit process. The RT log files can be processed once a day for the entire store day transaction set, or it can be processed multiple times during a day in a trickle polling manner, where RT log files are sent for the transactions throughout the day, such as hourly or every 15 minutes. In addition to transactions imported via RT log, transactions can be keyed directly into Sales Audit. Typically, this would be limited to missing transactions that actually occurred in the store but were not included in the RT log for various reasons. The transactions that come into Sales Audit in the RT log can be divided into business-generated and auto-generated transactions. Business-generated transactions refer to transactions that are generally as a result of a business event with a customer, including sales, returns, exchanges, customer orders, post-void, layaway, pickup, and delivery. Auto-generated transactions refer to transactions that are generated as a result of some operational task unrelated to a customer transaction and include things like open, close, term, no sale, pull, and loan activities. The tender is the payment made for a sale transaction or the refund on a return. Sales Audit supports a number of different tender types and also has a configurable structure allowing retailers to add other tender types as needed. Normally, each tender type, such as cash, credit card, check, or similar, is accounted for during the auditing process. Additionally, control totals for the tender types can be loaded via the RT log or entered online into Sales Audit. By comparing the system tender totals to the control totals, over short amounts can be captured. Rules are parameters used to perform validations against transactions and totals. Sales Audit has rules included as part of the base application that are designed to ensure quality data and to look for certain conditions that are needed by all retailers. In addition, retailers can define additional rules to meet their more specific needs. The rule calculation definition wizard is used to define the retailer's specific audit rules to meet their specific sales auditing objectives. When creating custom rules, the following will need to be defined: conditions to be applied to the data, what errors will be generated, how a rule failure impacts the system, and if errors can be overridden or if they need to be fixed in order to proceed. The system continues to process data that fails to pass a rule, unless it is specified that a rule failure is fatal. A fatal error stops all processing of a transaction for a store day. An example of a custom rule might be to review individual sales transactions that are greater than $1,000. Or another example might be to flag return transactions where 20 or more items are being returned. Errors refer to the discrepancies identified by Sales Audit when there is a mismatch between the data imported into Sales Audit and the foundation data extracted from merchandising and Sales Audit tables. Errors are also displayed when the data fails to satisfy the audit rules defined in Sales Audit. Evaluating rules is integral to the sales auditing process. Rules make the comparisons between data from various sources to find data errors that could be the result of either honest mistakes or fraud. Finding these mistakes during the sales auditing process prevents these errors from being passed on to merchandising and other systems. All errors must be resolved or overridden, depending on how the rule is defined, before the transaction can be passed to other systems. Another key concept in Sales Audit are totals. which are summation or counts of two or more records that are imported into sales audit. The totals calculation definition wizard helps to define the totals used in the auditing process and that are exported to other systems. These total definitions are used for rules based on totals rather than raw transactional data. Approved totals are run or executed as part of a batch process, which then creates the resulting total records. These total records can be used in sales audit or exported to other systems. An example of a total might be the sum of all house credit card transactions for the day, which would be exported to the general ledger. All of the sales audit features and configuration discussed are used as part of the automated auditing process to review store transaction data and look for errors or other conditions that should be flagged for auditors to review and correct before sales audit passes the cleansed data onto other systems. Auditors work on the data at a store day level and review and correct errors through the sales audit UI. Depending on the nature of the error, the auditor will need to make corrections to the transactions or override the error if it is not critical and is really just flagging a condition that should be reviewed. Any changes to transactions made by auditors will result in a full audit trail of before and after the change to ensure validity of the data. The auditor can make corrections one transaction at a time, or depending on the type of transaction and error, the auditor is also able to make mass corrections across the store day or across all assigned stores. An example of this may be an invalid promotion ID that is assigned at the store to many transactions. Sales audit now includes an out-of-the-box auditor dashboard, as well as contextual BI in certain processes. The sales audit dashboard is designed to help support the most common tasks that are required of an auditor, namely monitoring store status and resolving errors. The dashboard has three sections. The first section is used to help auditors monitor which store days are still open due to errors or late polling over the last week, so that they can prioritize their work, such as focusing first on the day with the most issues or focusing on the oldest open days first. The next section provides a view of open errors by day to give visibility to the most commonly occurring errors over the last day or week and allowing them to focus on resolving those errors first. The last section provides visibility to overshort amounts by day. This group of reports is intended to help the auditor proactively look for potential fraud in stores by flagging overages and shortages outside of a tolerance. Clicking on information in any of these reports launches the user into the screen that will best help them to either resolve the issue or find more detail. The last topic in this session is data exports, which are the end result of the overall sales audit processing. As described earlier, sales audit acts as an auditing and cleansing tool for sales and returns data before it is passed on to other systems for additional processing and reporting. Once auditing processes have been completed, there are a number of export processes to pass detailed or summarized information to other systems, both internal and external. The Oracle retail systems that will receive exports include merchandising, for which audited sales and returns information is passed to record and update the stock on hand position, as well as sales history and stock ledger. Any markups or markdowns are also captured as part of this process in merchandising. Based on these records, merchandising is able to determine the cost of sales. Store inventory management receives any changes made to transactions that impact on-hand quantities. This is used to correct the unaudited sales that are sent directly to store inventory management from point of sale. Retail Insights receives both transactional details for sales, returns, paid-ins, paid-outs, voids, etc., as well as store and cashier totals for reporting and analysis. Oracle Retail Invoice Matching is provided invoice details for direct store delivery POs, where the invoices are paid out to the vendor directly from the store. Outside of Oracle retail applications, other systems that may receive exports from sales audit, such as General Ledger, can have various financial data passed based on totals created in sales audit. These can include information such as liabilities captured for customer orders, as well as sales totals at retail, tender totals, taxes, etc. Additional exports to external applications include an automated clearinghouse, or ACH, output for anticipated bank deposit totals, and other export for account reconciliation that includes totals for things like bank deposits, lottery tickets, credit card totals, etc. This concludes this session. Thank you for your time and your attention.